Howdy. Good morning and welcome. Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com, and happy hump day. Man, do we got a lot of things to talk about. Really good news in the gold and silver markets today. You may be good news. They were getting hammered. Yeah, not anymore. A retest. Again, I think the bottom's in here. We'll see. We'll see. We're really close, but I think the bottom's in. Another major blow up in the bond market. This is starting to get, well, just like we talked about yesterday, the central bank's going to have to do something, and not just ours. Not just ours. Listen, you got to prepare. This is no joke. You know, when we tell you all the time, I'll tell you all the time, you got to be diversified. But right now, you need to have a little more in gold and silver. I'm telling you. This is how, you know, these things, this isn't a shock or a surprise. It shouldn't even be scary. It is what it is. We created way too much debt, way too much money, easy money for way too long, and this is what happens. And then we'll go digital and all this other stuff. So be ready. Where do I begin? I got so many things. Remember, this Friday in the radio station in Colorado, we're having a big movie night, 5 to 9 p.m. Cathay Athens stepping up, being catering the event, sponsoring the event. Give them your business. The Greek restaurant. I love Euros. So Greek food, great, delicious. You know, where I grew up in Syracuse, my grandparents and my parents as well. The neighborhoods were, and, you know, you kind of talk about, you know, we know like Black Lives Matter and all this thing, you know, like Mr. Potato Head is now transsexual. I don't know. And Dr. Seuss books banned. And I mean, it's gone absolutely ridiculous. But we grew up, my parents grew up, my grandparents, in all Italian neighborhoods. Matter of fact, my mom lived in a legendary part of East Syracuse called the Block. And it was, you know, kind of picture a city block with an apartment complex for that just was a big square. There's nothing but Italians in it, right? You know, but the funny part is the Italian bakeries that we'd go to were all run by the Greeks. You know, the Greeks, they know how to cook. They do. They're good at it. So Cathay Athens hooking us up, hook them up, let them know. KHNC sent you their CBD products. Listen, we got all kinds of new products now. Right now, I'm drinking the cocoa as we speak. It's my favorite thing that on the CBD side. It's great. Now I over scoop. Listen, you get it's a lot of cocoa. I'm just telling you. For $40, you're getting a lot of cocoa, and it's delicious, in my opinion, anyway. Check it out. We got the 3,000 milligram tincture, which I just ordered for myself. Because you know what? Listen, my body's beat up, and I'm a little heavy. You know, I got to get a knee done, and you know, my neck. I had my elbow surgery. 3,000 milligram. If the 1,000 isn't getting it done for you, get the 3,000. Triple the strength, only double the price. So, you know, it's great value. All kind, the salves, the lotions. I walked in here today. We've almost are out of product here, so we've reordered here. The radio station is we're gonna have jam-packed CBD products at the radio station in Colorado for the event on Friday. We're gonna have everything up there for you, so make sure you take advantage of that. Also, one other piece of radio news: we talked with David Knight yesterday. And let me be clear about this. David Knight called us yesterday, reached out to us yesterday. We had actually reached out to him after Alex Jones and him had a falling out. For those of you that don't know the name, David Knight was really essentially Alex Jones' right-hand man. In my opinion, this is my opinion, right? I like David Knight more than I liked Alex Jones. David Knight is kind of like the business end, where Alex Jones is the shock and awe guy. But I know a lot of you miss David Knight. He wants to come on the air and do a live show with us at 1360. If you're interested in sponsoring, advertisers out there, business guys, this would be huge for you guys. If you want to potentially sponsor David Knight, call the radio station 970-587-5003 and talk to Jason about it. But we're all geeked up about it. Great things are happening at the radio station each and every day. I can't tell you, we are blowing it up. He told a story where him and his wife, after the whole thing happened, they went on took a little vacation, went to Colorado. He was in a parking lot talking to his wife, and one of our listeners actually heard him and went up to him and said, "You're David Knight," and he couldn't believe it because they recognized his voice. Patriot Radio News Hour. When we get back, listen, we got to talk about the bond market, what's happening, what's going to happen next. 800-951-0592. So we've been following the bond market. And all of you know, listen, and I tell you, that's the biggest bubble. Right? And I love, oh, no, we don't see any bubbles. Nobody sees it. I can't see it. They see it. Right? If there wasn't a bubble, okay, they wouldn't have to manipulate. We all know that. Of course that's the case. Of course you're creating a bubble. You're manipulating the bond market. You want to lie, essentially, about the financial well-being of our money. Not of the country. Listen, America will not cease to exist tomorrow because of what's happening. The country will go on. Of course it will. And I believe, I said it the other day, I'm a Warren Buffett guy in one regard. I bet on America. Damn right I do. And I'm hoping that after this crisis comes about, that we pick a better path. Right? The bankers are going to fight us on this, right? Listen, Joe Biden's not going to pick a better path. You forget about that. That guy can't even stand up for Dr. Seuss, for the love of God. But what we're seeing right now is, and it's not just ours, England's doing the same thing. The Eurozone's doing the same thing. The Japanese are a great example. Their stock market has sucked for 40 years. Well, I guess not 40. 33 years, 34 years, give or take a year. It's been a disaster. And we're going down this same path. And again, remember, they're trying to manipulate what's happening with our money. Federal Reserve notes. I love Brian. Brian in his own way, he comes up with some great things. Fraudulent reserve notes, as he likes to call them. Because they're just a piece of paper with color on it. I mean, some say, I don't know if they're pretty colors. They're just colors. It's not worth anything. It's only about what the perceived value is. And what's been happening lately is every once in a while, they make a mistake. And I don't even want to call it a mistake. The truth starts to show through. And picture like a dam. Okay, picture a big dam, and this dam has all these little holes in it, all these cracks in it. And all the central banks are trying to put their fingers and their toes and all this stuff in there. And every once in a while, a new one pops up, and they got to do it. Remember, go all the way back, all the way to 2019. Right? When they were talking about, oh, yes, we're going to start selling off the balance sheet. Right? We fixed it. We fixed it. This is before COVID. Listen, in 2019, before COVID, we hadn't even heard the word coronavirus yet. And they were trying to reduce their balance sheet. Remember, their balance sheet was over $4 trillion. And they were getting receipt. Oh, it's better now, and we're tapering. And this tapering started like March of 2019. And it was so funny because Bank of America, their bond market people, wrote a letter to the Federal Reserve. And this was, I think, in May, saying, hey, guys, what are you doing? We're going to have a horrible problem in September. Right? There's going to be, look at the issuances that are coming out. This can't happen. The bond market's going to freeze up. It's going to lock up. And guess what? That's exactly what happened. Right? And then they started buying all this stuff, the daily repos. Remember, they had all these programs. We're buying $100 billion a day and $70 billion a day. We're going to buy these for 2 weeks, another one for a whole month. And you know what? Around June of last year, remember when they started, it's a 2-week problem. Well, in June, the Fed was now buying hundreds of billions of dollars when they stopped reporting it. And a lot of us thought, okay, maybe it finally went away, right? The 2-week problem was a 9-month problem. Oh, no. No, they just stopped doing it. Now they don't tell us how much they're doing every day. We don't know. We know about the $120 billion a month, and we know about all this stuff. But again, just because they're covering it up. Go back to my analogy of the dam. The integrity of the dam is failing. And the realities are our central bank lacks integrity. They don't want, remember the bond market in Wall Street, this is supposed to be price discovery. And you see all the manipulation everywhere because they don't want price discovery. The last thing the central bank wants is for bonds to be priced appropriately. Right? All of us know, hey, when you make more of something, and you make too much of it, you got to lower the price to get rid of it. Right? And so when yields rise, okay, when bond yields rise, that's lowering the price. See, in the bond market, it's like, hey, okay, this is crazy. It's got to go up. We got to lower the price. It's just way too much. saw that last week. Guess what? It happened again today. They're not going to want to tell you about it, but I'm here to tell you. This time, here's the funny part. It wasn't here that it happened initially. England had a problem today in their bond market. And then when our bond market opened, guess what? We had a problem in the 5-year note again today. By the way, just so you know, March, we are going to set an all-time record for bond issuances. In other words, the supply just it's unrelenting. Hundreds and hundreds, trillions of dollars we have to sell every single day, every single week, every single month, every single year. And it's starting to get overwhelming. So right now they're looking at the 5-year note, saying if the 5-year note breaks 0.75%, we got another problem. Remember, the Fed, they meet in 2 weeks. I want to say it's the 16th and the 17th. They're trying to hold out until then. And I'm going to tell them this, if you're listening, which I believe they are. Jay Powell, if you're listening, brother, fix it now. Just come out and do it today. Who cares? I know, right? Oh, well, we got it under control. No, you don't. You don't have it under control. Just come out and tell us. We already know. Just tell us. Hey, we're going to do Operation Twist. Hey, we're going to pay more to not lend. Hey, we're going to pay more on repos. You know what? We're probably going to have to expand our balance sheet. We're probably going to have to buy more bonds. Just say it. Of course, if he does that, it just lets you all know what? We're a lot closer than you think. And this is the sad part. If you wait a second too long, the damage is going to be dramatic. I warned you last week, we were so close to Wall Street being down 4,000 instead of 1,000. I don't want that to happen. But understand, this is going to happen. Right? Because the integrity, the structure of the dam, it's broken. How are we going to fix it? Well, obviously, $30 trillion plus. Yesterday I was telling you, okay, we're going to have a Federal Reserve balance sheet by this time next year between 10 and 15 trillion. And I think it's probably going to be about 12 or 13, but between 10 and 15 trillion. We're going to have a national debt, give or take 33 to 35 trillion. We're going to have 45 to 50 trillion dollars worth of debt between the central bank and the federal government, not to mention everybody else. That's 2.5 times the size of the economy. It's not doable. And this is the problem. And when it finally breaks, right, it's going to be horrible. It's going to be terrible. But I just wish they'd just get it over with, right? Come out and just tell us, okay, listen, I mean, is it really a big secret? Hey, we're going to have about $50 trillion worth of debt to come the next year. It's just not mathematically possible. I mean, really think about it where we are today. We're already at 36. By the way, they're saying the Senate's going to take up the 1.9 trillion next Wednesday. So all right, now we'll be at 38, right? You know, but yeah, the whole thing started in the UK. Remember, they're doing the same thing, right? The UK, everyone on the lockdown, huge problems. And they're talking about the U.S. dollar rate market is showing more worrying signs of fragility again and again. This is a liquidity problem. This isn't a short squeeze, right? This is an oversupply problem. There's just way too much debt and not enough people to buy it. Pretty simple. And what's supposed to happen is what? Well, we got to pay a lot more interest to get anybody interested. Nobody in the right mind. Think about this. Inflation is here. You know what? I'll tell you what. I'll tell you a story. A buddy, one of my good friends, he's a caterer. I'll tell you the story he told me yesterday. Patriot Radio News Hour. We'll be back after the break. Now, last week, Jay Powell told us, oh, there's no inflation. It's going to be years. That's what he said. To get to that mythical unicorn creature called 2% inflation. Remember, they're going to use an arbitrary 3 years that they determine, right? Remember that one? It was what a great line. Yeah, we're just going to make it up. We're going to make it up anyway. So I'm just going to tell you it's not going to happen because he knows the turmoil that would happen if Jay Powell had to come out and say we've got to start raising rates. That'd be horrible for all the inflated bubble assets. They don't want to do that. They should do that. They're not gonna. But the ISM Service Sector Survey and the producer section, pick one, doesn't matter. They're the highest levels since 2008 for prices paid, which means inflation. Things are getting a lot more expensive very, very quickly. So, a buddy of mine, very good friend of mine, he's a caterer. He's had a tough go, as a lot of you could imagine with coronavirus. Things are getting better for him here. And he was talking to me yesterday and said, Joe, man, I'm worried. Gasoline price, I just filled up for gas today, $45 for me for 14 gallons. But he says to me, he goes, I've had to raise my prices. He goes, but I don't seem to be able to raise them enough. He goes, every time I go to rebuy, to reorder, everything's more expensive. Right? Remember, Eric used to tell the story, right? You go to the grocery store, you buy the gallon of milk. And you pay for it, you pay $5 for a gallon of milk. The store goes to reorder. All of a sudden, they want $7 for the gallon of milk. So the store raises its prices to $10. You buy your gallon of milk, you pay the $10, he goes to reorder, and now they want $12. So he raises the price to $15. He goes to reorder, now they want $20. This is what's happening. I mean, copper's flying. $4.15 right now. It's incredible. Lumber, all these things. It's here. And everyone's doing the same thing. I can't raise my price fast enough. And they're sitting there trying to act like it's not happening. You can do that for a while. But now the bond market's having problems. big problems. This is the size, and I don't think people understand the size of the bond market. You should. Right? Our bond market in treasuries is $36 trillion. It's just us. It's massive. And this is what's going to cause all of these problems. Because here's the realities. Right? The Fed's funds rate, if you want to believe the headline today, I don't know if you saw the headline today, GDP could be 10% in the first quarter, which it won't be, but the GDP trackers that the central bank uses early on, they're always higher and it always comes down, but it's up like 10%. Of course, a lot of it because prices paid. There's different types of growth, right? And when you have growth via prices paid, that's a problem. Right? That's bad inflation. And they're talking 10%. I remember going back when Larry Kudlow would come out, oh, we're tracking 5% GDP growth. And I'm like, yeah, it's not happening. Right? What did we get? We got a couple of quarters of 3, remember? We were happy about that. Listen, we are going to have positive GDP growth this year. We are. Because they're going to spend and spend and spend. It's going to happen. But we're going to have massive inflation. And I don't know how they're going to try to cover it up. There's only a couple of options. We went over most of them yesterday. The twist option, right, where the central bank sells all their short-dated maturities. Remember what I just told you about the 5-year note. Now, short-dated maturities are less than 5 years. And then they buy all long-date maturities. Very dangerous in this regard. Imagine a central bank now that has nothing but 5, 7, 10, 30-year notes on their balance sheet. Right? And I'm telling you now, it's already $8 trillion. Going to be, let's just fast forward a year. They got a $12 to $15 trillion balance sheet. And rates start rising again. Now, all of a sudden, all of the debt the central bank is holding is losing money. I mean, that's disastrous. Now, again, they can just keep holding it and holding it and holding it. But they're trying to keep the rate low, right? And that's why they're going to buy the long-dated maturities, try to drive that rate down. Here's the problem. There's so much debt out there. That's not enough. It's not enough. And it's one of those things where it is what it is. This is the path they took us down. Right? They didn't want, we want to fend off a depression, right? It was the housing crisis and then the financial crisis and now it's COVID. So listen, this was happening way before COVID. COVID is the blame, right? It's COVID this and COVID that. Believe me, it's not true. This was already happening. Now, did COVID speed it up? Yes, it did. We know that. We're not dumb. Right? We're running $3, $4, and $5 trillion budget deficits. We get it. The Fed's balance sheet in less than 1 year went from $3.8 trillion to $8 trillion. We get it. Are you prepared? That's the question. Patriot Radio News Hour. I'm so excited about the special we got coming up next. Don't touch that dial. 800-951-0592. Patriot Radio News Hour. We've got a very, again, kind of whistling past the graveyard thing here. when it comes to the bond markets. This time the problem started in England, has rolled over here again to the United States, and we know it's a simple problem, supply and demand problem, and the Fed needs to do something about it. Period. And I think it's clear what they need to do, right? Because this is the path they chose. You can't go back. I wish we could go back and do it differently, but that's not possible. And so now we got to ride it out, right? It might as well, if you're gonna right swing for the fence, right? We know eventually we're going to strike out, but we're going to keep hacking here. Can they wait for their meeting? I don't know. And I'm more of the why risk it now? Why don't you just come out and tell the truth, right? But of course, they want to try to shape the narrative. But it's created a nice little opportunity, right? We've had gold pull back, silver pull back. On the paper side, physically, not a chance. Yesterday I was telling you, overwhelming demand out of India and China is just gobbling up gold like it's going out of style. So the supply, we have this fundamental physical shortage with paper markets that are reacting, because it's all computers, right? They're reacting to the bond market. Right, because it's supposed to be, right, remember, we know, hey, yields go up, dollar's supposed to go up, dollar's not going anywhere. I mean, just before the big tantrum, the dollar was 89 and change. It's now 90 and change. I mean, it hasn't gone anywhere because it's not for good reasons. And it's just created an environment where the opportunities that are available aren't as good as they could be because no one's got supply. Today, we haven't run this item, and it's been a while. When we do, they're expensive. But we've got 100 $5 liberties. I don't have them on the website, but I'll put them up there. I'm afraid to put them up there because these should go quick. At $575, which is the cheapest price on a $5 gold piece. Closing in on a year since coronavirus, since March, really, of 2020. 575, but because I know it's hard, and we did this yesterday as well, and it worked out pretty well. I know it's hard because you're like, oh, it's down, and maybe it'll go lower and all this stuff, and it's hard to pull the trigger. This is when you need to really be buying. So I'm going to throw a half ounce, and we're going to put a package. You're going to get a $5 gold piece and one of those half-ounce silver coins together for $575. If I priced the silver coin and priced it aggressively, it's at least $15. I mean, that'd be a great price. Really should be more like $17, $18. But if you think about it that way, you're paying like $5.60 for a $5 lib and $15 for a half ounce of silver. Just really, really, really good value. And fractional gold is so hard. I mean, the Indians are out of sight price-wise. The $5 liberties, mostly we got to sell them like AU quality, and that's there's just not a lot of product out there. This is a huge price opportunity here. Yesterday I told you this is a bet. Yesterday's deal that was off the charts. This one's equally as impressive because it's a $5 gold piece. So you get the quarter-ounce gold piece. This is the old one, the Liberty, 1866 to 1907, $575, and you're going to get a half-ounce silver coin to go with it for $575 at 800-951 0592. Now, I don't have the $5 Liberties, but they'll be here quickly. You know, it's Wednesday, so possibly Friday, but no later than next Tuesday. They'll all be here, all of it, in both places, both here and in Colorado, for you to pick up. It's the $5 Liberty Gold piece with a half ounce of silver for $575 at 800-951-0592. I did take a quick look here. The 5-year note, which right now, remember last week it was the 7-year note that caused problems. But the 5-year note, they're watching, and I don't know what's significantly important about the 75 basis point level, but right now it's at 0.73. And they're saying, you know, if it goes above 0.75, that's going to be a bad thing. The 10-year note rising as well. Got back down to like 140 late yesterday, 148 on that 10-year note. And remember, right, we know the 10-year note, when it gets above 150, things start to get a little scary. And again, this all started in England last night. They had a horrible bond auction. We followed it up with a bad bond auction in the morning today. And again, the central bank needs to step up, but of course, you know, they're blind. They can't see anything. Patriot Radio News Hour, final segment coming up. 800-951-0592. Just like I thought, these are going quick. We got 65 left of the $5 Liberty, the cheapest price in essentially a year here. $575 plus. You're going to get a half ounce silver with it for $575. 800-951-0592. Fed governor starting to speak up. Mary Daly, she's the head of the San Francisco Fed, talking about the Fed may change its mix of maturity dates, which is Operation Twist. Lael Bernard, she's the one we got to start with, right? She's the one that's being groomed as the next head of the Fed. She's saying she's paying close attention to market developments. I hope so, right? Isn't that your job, right? Some of the moves last week and the speed of the moves caught my eye. This was yesterday. I want to point that out. Yesterday, she made these comments. She added that she would be, quote unquote, concerned if the disorderly conditions or persistent tightening in financial conditions keeps occurring. It happened again today. She's talking about reigniting some old policies. So again, I think the Fed's laying the groundwork. I think Operation Twist is happening no matter what. I think that's a given. It's just not enough. That's the problem. I'm hoping it buys a little time, but they've got to just come clean. Just come out and do it. Open up the balance sheet. Get it over with. Right? We know you're not fixing it. We're never paying this off. We get it. You've created all these bubbles, and you know what? Let's just ride it out till it pops. By the way, South Korea, Australia have announced that they're going to be doing twist operations as well. They're all going to be doing it. Get ready. Have that financial house in order to take the gift. Take the gift. Because here's the thing. They're going to make these rates go back down. I promise you. That's the next leg down for the dollar. This is it. This is wherever the bottom is. And if I'm right in the bottom's here, this is it. They are going to spend the rest of the year trying to keep these rates down, which is going to put even more pressure on the dollar. Right now, gold going all the way back to 1,700 this morning. All the way back now. So gold 1,720 right now. Silver went back to $26. on its way back, 2640 right now. Like I said, the Dow is mixed. By the way, I didn't even talk about ADP. They're the payroll processor. They do the first of the jobs number. They were expecting 250,000 jobs, only 117 according to ADP, 117,000. So that was way under expectations. But I don't like their number anyway. So we'll get jobless claims tomorrow. We'll get the Fed government payroll number. And I didn't even talk about, how about Texas today? Everyone take the mask off. Everyone go back to work. Everyone go back to school. If more states would do that, the economy would get a lot better a lot sooner. Patriot Radio News Hour. $5 liberties with that half ounce of silver. $575. 800-951-0592. God bless. We'll be back tomorrow.